Okay, let's talk about BIGBEAR.AI, ticker BBAI. If you've been keeping an eye on this stock, you might be feeling some serious whiplash, right? One minute it looks like it's ready to take off, the next it looks like it's in trouble. The data is sending a ton of mixed signals, and in this explainer, we're going to decode them together. So let's just cut right to the chase. This is the big question we're all asking. On the one hand, you've got this AI stock with a lot of buzz, but when you look under the hood, the technical indicators are flashing some major warning signs. So which is it? A golden opportunity? Or a trap just waiting to be sprung?
Honestly, the best way to think about BBBI right now is as a massive technical tug-of-war. You have these bullish forces pulling with all their might in one direction and bearish forces pulling just as hard in the other. Our job is to dig in and analyze both sides of this fight to see who might just have the edge. All right, so let's start laying out the evidence. As we get into it, you're about to see exactly why this stock's technical picture is it's so fascinatingly confusing. And wow, this slide just perfectly sums up the problem, doesn't it? On one side, you have this amazing risk/reward ratio of 9.51. That is incredibly attractive, suggesting the potential upside is just huge compared to the downside. But then on the other side, you have a technical score of just 32.45, which basically screams, be careful, pointing to some serious short-term weakness. How can both of these things be true at the same time? Let's start by looking at the bears side of the argument. We're going to build the case for being cautious piece by piece, based on all those technical indicators that are flashing red. So from a bird's eye view, the arguments against it are pretty compelling. Key momentum indicators, they're negative. Volume analysis points to something called distribution, which is a sign that big investors might be selling. And the price itself is struggling below its key short-term moving averages. It's really like a trifecta of warning signs. So let's drill down on that idea of distribution. The accumulation/distribution indicator is at a mind-boggling negative 755 billion. What that suggests is that even while the price looks kind of stable, the big players, the institutions, might be quietly offloading their shares. It's a really subtle but super powerful bearish sign. It's kind of like seeing the smart money tiptoeing towards the exits while everyone else is still at the party. And here's the cold, hard data to back that up. The price is sitting below its 5-day and 20-day moving averages. Think of those as the short-term trend lines. The MACD, a huge momentum indicator, is in the red. And look, the price is practically scraping the bottom of its Bollinger Band, which usually signals bearish pressure. The big takeaway here is that in the short term, things look undeniably weak. Okay, I know, that was a pretty strong case for caution. But remember what we said? This is a tug-of-war. So now it's time to flip the script and hear from the bulls. Let's dig into the case for optimism. Yeah, because this story absolutely does not end with the bears. There are some really powerful counter signals that suggest there could be a significant opportunity hiding just under all that short-term weakness. And it all comes back to this one number again, 9.51. This is that incredible risk/reward ratio we saw earlier. This single data point is basically the cornerstone of the entire bullish argument. It suggests that, from a strategic point of view, the potential for a big gain is just mathematically way higher than the potential for a loss. And here's another piece of the puzzle for the bulls. A linear regression analysis, which basically just calculates the stock's price trend, suggests its value should be around $7.27. With the stock currently trading at $5.68, this implies it could be significantly undervalued compared to its own recent trend. And there's more. The stochastic indicators, which measure momentum, are deep in oversold territory, a condition that can sometimes happen right before a price bounces back. And hey, while the stock is below its short-term averages, it's still trading above its long-term 200-day moving average, which is a key sign of long-term health. It's also above the VWAP, the average price adjusted for volume, another good sign of underlying support. So, we've got a powerful bearish case and a really compelling bullish case. Where does that leave us? Well, it leaves us at a very specific price battleground, and this is where the conflict is likely going to be decided. That entire tug-of-war we've been talking about can be boiled down to a super narrow price range. Think of it like the front line in a battle. What happens right here, in the very near future, could tell us which side is about to win this thing. Here is the ceiling, $5.84. This is the key resistance level. For the bulls to prove they are really in control, they have got to gather enough strength to punch right through this price. This is the line they have to cross.
And this is the floor, $5.41. This is the critical support level. If the bears can manage to shove the price below this floor, it would confirm their control and signal that more weakness is on the way.
So it really all comes down to this. A decisive move above 584 is a potential victory for the bulls that could trigger a lot more buying. A breakdown below 541 is a win for the bears that could trigger more selling. These two numbers are the key triggers to watch.
Okay, so given this battleground we've just defined, the technical analysis points to 3 potential outcomes, each with a different probability. Let's take a look at what the future might hold.
According to the analysis, the most likely scenario, at a 40% probability, is a bullish breakout above that resistance ceiling. But close behind, at 35%, is a bearish breakdown below the support floor. And finally, there's a 25% chance the stock just kind of consolidates, moving sideways within this battleground for a while. It is a very tight race.
And, this really is the bottom line. It brings everything we've discussed together into one clear, actionable idea. The conclusion from the source material is direct. The key is to watch those 2 price levels. They are the triggers that will likely confirm which direction this stock is headed next.
So, we've laid out the evidence. We've shown you the strong arguments from both the bulls and the bears. And we've identified the exact price levels where this conflict is going to be fought. The data has drawn the map of the battlefield. The only remaining question is, which side do you think will win?